Welcome back to my channel. In this video, I wanted to cover a super investor by the name of Guy Spier. This was a name that a few viewers had responded with a suggestion on other super investor videos saying that it might be worth taking a look at this super investor. So I did so. And I'm really glad I did that. He was a really interesting person to study. Overall, I really appreciate his philosophy. He is humble. He really discloses the things he's not good at, and he has been a very good investor overall. He is a really bright guy who studied at Oxford, but he studied philosophy, which is interesting, and then got a master's in business from Harvard. Now, his investing strategy is he's a value investor. He's studied Warren Buffett, Charlie Munger, among others, and he has a long term investing approach. He likes quality over quantity, and he is research driven. I like his approach, but I kind of like other investors in the fact that they like discounted stocks. They really like going after stocks that are discounted. And the other thing that I thought was interesting and contrary to what I do is he doesn't believe in growth stocks all that much. He doesn't like technology growth stocks, at least from some of the interviews I was watching. So I thought that was a surprise because let's face it, technology has been a boom. But we'll take a look at his portfolio and see if, in fact, what he said matches what he's investing in. So let's take a look at Guy Spier, go through his portfolio, kind of assess how he's doing year to date, how he's done over time. He manages the Aquarium Fund, which is $450 million in assets, and he is makes himself available. I really like that. These super investors, especially Guy Spier, is very generous with his time, and I really appreciate that. I think there's a lot to learn from him. He also published a book, and if you would like his book, you can buy it on Amazon. And the education of a value investor, he goes through his life journey of how he really went about it early the wrong way and then changed. It became really successful. One of the things I do draw out of his book that I like a lot is at the very beginning of his career, he went to work for a firm that was a lot like the Wolf of Wall Street situation, where you had these very greedy investors. And it was all about trying to make the most money, even though if it was toxic and not good for the client. And really, you were selling a lot of bad stocks. And he was caught up in that early in his career. And he caught himself and realized that really that was not the path that he wanted to follow. And he took a step back and kind of redefined the kind of investor he wanted to be. I really appreciate that. I appreciate that he had a change in strategy and decided to be a long term investor. It's often in investing that you hear of get rich ideas quickly. And you hear of how, young investors, especially, they want to get rich really fast. And that's not what I've never ever believed in. My background, I come from humble origins and worked for my money and invested it and tried to learn along the way. I too have a master's in business and with finance being the emphasis in my master's, accounting being the undergraduate degree. So I got a lot out of my education and my business experience. But I'm not the type that really tries to get rich really fast. I don't buy to get rich in 2025 off one stock. I want to make a lot of money on that stock for the next 5 to 10 years. That's the goal. Yeah, I would sell the stock, before then, maybe even by the end of the month, if it ends up being a company that surprises me and they no longer fit the investing criteria that I look for. But I really like that as an investor, Guy was able to share that personal story because I think I appreciate his story, and I think I kind of identify with him. I think if I sat down and had a bite to eat with Guy, I think I'd probably enjoy that conversation very much. So let's get into his portfolio and see how he's been doing and see if we can get any good investing ideas from Guy Spier. So let's take a look at the portfolio of stocks that Guy owns. And starting with, he's a big fan of Warren Buffett, Charlie Munger, and it really shows up. He's got 25% plus 8.16%. So collectively, he's about 34% invested in Berkshire. Not a bad idea. It is doing well this year. So it's up 15.68%. So that's not a bad idea at all. American Express, Warren Buffett's a big American Express guy, and so is Guy. He owns 19% of that. That's not doing all that great, but it's okay, I guess. And then Mastercard is doing far better. Bank of America, that's another Warren Buffett stock, and he's in it pretty deep, almost 11% of his portfolio, and that's down quite a bit. Um, Ferrari, he's in Ferrari, which is interesting, and that stock's not doing bad. It's in the green, which this year, if you have a stock in the green, that's good. Micron is not doing very well. It's down 17.5%. That is a semiconductor stock. And semiconductors really been pulling back. All these numbers, by the way, these are year-to-date performance numbers, just seeing how he's doing year-to-date. Moody's, he is down a bit, about the same amount as the S&P. Alibaba is a big winner for him. It's up almost 25% year-to-date. Looks good. And then we've got the Daily Journal. It's down quite a bit. That's a pretty big blemish there. Google Alphabet, that is down, and Seritage is down quite a bit. AMR, and the other super investor, Prabre, is a big investor in AMR, and these guys are good friends. I guess there's some influence there, but it's a very small position. But that one has been really tanking. And then Core Natural Resources, that was a purchase that he made in the first quarter. I'm not sure which date, and it's a real small position. So overall, he is up, he is only down 0.39. I think that the Berkshire Hathaway position is really keeping his portfolio in a good place, because when you compare his portfolio versus the S&P, the S&P as I speak is down 8.9%. And when I rank Guy, he's ranking in second place overall on a total of 12 investors that I've reviewed. When the only investor that's doing better than him is Michael Burry, and he's right there, right ahead of David Tepper. Carl Icahn is in fourth place, and then the rest of the investors are down here. His good buddy, Manish Pabre, he's down 29%. And those are the only three stocks that he trades in the US. I know he invests in Turkey as well as in India, but I can't look at those stocks because those are in other exchanges. I'm only looking at US-based stocks. So it looks like his performance is beating the S&P. Nice job, Guy Spier. His portfolio is heavily weighted on Berkshire, and it's so far outperforming the index. Looking at his performance more long term, over the 3-year, according to Stock Circle, he's up 29.8%. That's fairly good. Over the 5-year, up 112%. That's fairly good as well. Overall, I really appreciate Guy Spier's perspective and philosophy. I really do like how he thinks about things. I do invest as an investor different, and that's fine. I like studying these super investors to learn a few things here or there, but it's not meant to completely copy them. I really like studying these guys, especially since we have a down market. In a down market, it could be pretty depressing, frankly, but studying these successful investors teaches me or reminds me that, hey, we got to hang in there and invest on principle, manufacture success by making the right decisions. I'm not a trader. I'm a long-term investor, and I'm going to continue to hold my positions in the companies that I believe in. I think Guy Spier certainly agrees to that particular task of being a good investor. So I learned a lot from Guy Spier. I really enjoyed studying him, and I'll continue to update his information. By the way, the information that was provided was actually updated yesterday. So he just reported his 13F filing. So the information on his portfolio is very, very recent, and it was good to get that information. So thank you for watching the video. Please provide comments on what you think of Guy Spier, and suggest any other investors you think I ought to take a look at and make a video about. Thanks so much for watching. Good luck with your investments.